Coming back from the Thanksgiving week where we actually saw a slightly positive finish for the markets, we start the week off really, really bad. I mean, the S&P 500 was down 1.6%. You had the Nasdaq 100 was down about 1.5%. You had the Russell 2000 down 2%. So are we just getting ready to top out here, finish this dead cat bounce, and go right back down to the downside, test those October lows? Or are we going to really break through this declining trend line, going all the way back to the beginning of the year and finally start to recover some of these losses that the market has taken so far this year? I'm going to go over all of that and more here. Let's go ahead and get right to the charts here so we can just go ahead and pile into the technical analysis. So first off, you have this yellow trend line going all the way back to January. This thing continues to not break. You also go back to this 200-day moving average. Previous time that we tested, going back to August, we saw a top of the dead cat bounce. That resulted in a sharp rejection to the downside. Now, guess what? We've been rallying over the last few months, couple months actually to be exact, and now we are looking at a rejection again at this 200-day moving average. Not quite there, but in the grand scheme of things, it's pretty much right below the 200-day moving average. Now, going back to this declining trend line though, previous two times that we've tested it resulted in a sharp rejection in price. We haven't quite got there yet, but it's getting extremely close. And you have this rising trend line off of the October lows that is also in place. So between this support level here and the resistance level above, you have about 150 points that it continues to tighten each day. So while it's 150 points today, might only be about 142, 141 points tomorrow, but it continues to tighten. And while I mentioned in the previous update that I did, hey, you know what? I would rather us trade a little bit sideways into this rising trend line before testing instead of just going all the way up here from where we were at in mid-November and going straight back down to the rising trend line. We've pretty much done exactly what I hoped for, trading sideways. But now, is it going to be able to hold it? Because this was a pretty significant sell-off today. What you're going to want to start watching going into tomorrow, if we start to sell off again, you're going to want to watch the November 17th lows for the S&P 500. Can that level hold? And if it can't, then that's where I think you start talking about, oh, maybe we're going to be setting up for another retest of the October lows. But as long as this rising uptrend is still in play, I'm not really ready to jump to that conclusion yet. So let's watch to see, what does it do when it tests this rising trend line? Does it bounce? And then if it does bounce, how does it handle this declining trend line that's coming in really hot here and bound to be testing it probably before the year finishes out? So I would expect something before December for us to get a test of this declining trend line. And can we break through it unlike the previous two times that we tested it? Now let's look at the Qs. The Qs, we talked about this head and shoulders pattern before. It played out to the downside really nicely. Now you have this breakout level, and we'll give it a fancy little purple color here, you know, Bob Ross style. This purple line represented a good breakout for this index. But now, what do we see going on here? We see price dipping back below this breakout level. And you've got a triangle pattern also forming in the short term as well. So for me on the Qs, and I'm still in the Qs from a long standpoint, we need to see whether or not can it hold this rising trend line. If it starts to break below the lows from last Tuesday, that would be the 22nd, then that becomes very problematic for the Nasdaq. And unlike the S&P 500, it's not a very far distance from retesting the November lows and then the subsequent October lows. So this level breaks, I would expect the November and then the October lows to eventually be in play. You also have this unfilled gap here that has yet to be filled. This goes back to the huge gap higher from November 10th following the CPI report. So that's still in play. It's unfilled. We got a descending triangle pattern here that sometimes results in hard breaks to the downside. It's lost its breakout level. But in the meantime, with all that being said, it's still trading in the sideways range. But there's a storm brewing on this one. That is one to really pay close attention to, especially if you see Apple continue to sell off like what we've seen in recent days here. We saw Apple take quite the nosedive here over the last 2 days. Will that play out into the Nasdaq as well? Because if it does, that's going to cause a lot of pain, and it's likely to lead to this gap fill. Now, let's check out IWM, the Russell 2000 small caps here. Going all the way back to the November 2021 highs, you have this massive declining trend line. And guess what? We're testing it, and it's seeing some price rejection, some heavy price rejection, in fact. We tried to break above it multiple times. We tried to break above it right here on Friday, could not get above it. Now we're seeing the hard rejection. Then you have this rising trend line off of the October lows. Remember, IWM is the only one that has not broken its June lows, so that's pretty significant there. This rising trend line off of the lows for IWM, this is being tested, and we're at a breaking point for the Russell 2000. Is it going to break above this declining trend line that goes all the way back to November of last year, or are we going to break below the short-term rising trend line, which also then sets up for a move down to this, what I would say about 174.75 level? That would be the next layer of support. If that one breaks, then you're wanting to start looking at this level right here. This goes back to the September, October lows. So that would be around 163. Those two levels are the levels that I would be watching if IWM cannot hold this rising trend line. Now, let's look at the VIX. Seeing a little bit of an uptick there, but this one is yet to be able to break through that declining trend line. Now it's just below it right now, this declining trend line. That would be bearish for the market if this breaks. If it breaks to the upside, I would expect to see the rest of the indices break to the downside. Then you have T2108, and this is going to show you just how overbought the market is going back off of those September lows, October lows actually, and the previous dead cat bounces. We've peaked at August, we've peaked at March, and we're right around that same area. So there is reason to be concerned, a little bit cautious in this market. I've gotten out of my Apple position. I was also in Krispy Kreme, got out of that one today as well, both for profits, but I am not overly confident that this market has enough mojo to keep this bull market rally running. And so I'm becoming a little bit more hesitant about adding new long exposure to my portfolio. And in the meantime, I'm going to wait and see what the market really wants to do, because as you can see, like with the Russell 2000, with the Nasdaq, and with the S&P 500, we're starting to get at this juncture, at this fork in the road where the market's going to have to make a decision. Are we going to continue to break higher, break through some resistance above, or are we going to start breaking some short-term rising trend lines and retest those October lows and then those June lows for IWM? If you enjoyed this video, I would encourage you to like and to subscribe to this channel. It helps me quite a bit. And tell me down in the comments below, what is your forecast for this market? What are you expecting? What are you seeing on the charts? I want to hear about it, because I might have missed something that you've seen. So let me know. Thank you guys, and God bless.